Yeah, I'm losing my
Futures
edge.
with strict mechanics is the small stakes topic of the day, and it's an apt one, Pete. We've been getting a lot of messages from people in the small exchange community talking about positions that have gone awry. And that is going to happen from time to time, especially when you have a stock market, Pete, at all-time highs, breaking through all-time highs again today. You've got a foreign exchange market that is at multi-year lows in the US dollar, breaking through those lows every single week for like the last several months, it seems. And you've got metals ascending to highs that they haven't seen since summertime. When you have price extremes that are building on price extremes, you have a lot of people saying, hey, trades that I put on as scalps are becoming problematic.
Right.
And today I want to do some work to getting people out of those problems, hopefully before they even start, because scalping futures, Pete, hopefully maybe you can actually give some color to what scalping futures is in your mind, but it demands strict mechanics.
Absolutely. And, when I started, scalping futures was making one tick, buying on the bid and selling on the offer. Now, in the democratized world we live in, which is great, everybody has equal access to the marketplace. Scalping futures are when I say non-denominational, you have a strategy, you have a bias, you implement it with a very capitally efficient tool that's very liquid. And that bias may be an hour, maybe a day. My bias is usually, my management is usually dictated by movement, not necessarily by as much by time, but that mechanics of directional assumption. So you're trying to enhance a 50-50 bet by scalping futures, and you're trying to we do it in a lot of different ways. We add pairs, we add different products. Sometimes we add premium, all ways to take statistically that 50-50 bet and make it slightly better. But the mechanics are the key part, because when you're trading these, you've got to think about, and this helps so much. If you if you have a strategy and your mechanics, which are your entry level and most importantly, your exit level, if you're wrong, if you can't find a good one of those, no matter how dependent you are or excited about your strategy, it means the location of the market isn't a good place to implement them. So you have to make both those determinations. There is again, scalping without mechanics is basically the movement drives your decision making relative to the other way around, and that is very problematic.
Absolutely. And you hit on some great pieces in there. And to start the segment off, we're going to look at small metals, SPRE futures, which is, gold, silver, and platinum in one product. So the precious metals asset class, you hit on a couple of things, and I want to dive deep into this. One is that here in 2020, almost 2021 now, a lot of that edge between the bid and offer has dissipated, because there are so many people in the market, which is actually a great thing. Because, would you rather there be edge between the bid and the offer like there was in the 80s and 90s? But guess what? Only a couple hundred people here in Chicago and New York could take advantage of it. No, nobody wants that. So now you've got a different opportunity, which is also great because, Pete, you can correct me if I'm wrong, but you're looking for edge back in the 80s and 90s between the bid and the offer in one market. Like
Absolutely.
you're not trading, you're not going from metals, equities to FX to commodities, at the flip, literally the click of a button like we can today.
And that's what's so powerful. You're right. You had to physically fight your way out of, a pit with 200 chuckleheads in it to go fight your way into another one to trade that other market. And you're right. You were where the market was being made, so that ability to buy on the bid and sell the offer was incredibly powerful. It spoke to the inefficiency. The leveling of the playing field has now, and it's true, the ability to move your mouse from opportunity to opportunity is so powerful. It was, the democratization and leveling of the playing field is empowered, and it speaks to, you don't have to be a one-trick pony. Everybody, for the most part. Now, I would trade a number of things, but be in one single pit, obviously, at a time, but mostly in currency pits or S&Ps. And you were really, there was nothing more frustrating than sitting in your pit and hearing 300 yards away, like the world dissolving, and 500 guys screaming, and you're like, why? I got nothing going on here.
Well, it's frustrating because you had to almost You had to like have a hunch going in the door, right? Where it's
Yeah.
like, I'm going to go in the euro pit because it feels like there's going to be euro movement. What's great here in 2020 is that yes, that bid offer, arbitrage there, the opportunity in that inefficiency is gone. But you don't have to guess at anything.
Right.
Like right now, equities are slow. Everybody who's trying to make articles out of equities and talking about, oh, another high or what this could mean, when is the downfall of equities coming, and I'm right there with them. I wrote an article last week about waiting for equities to fall. There's nothing to do there, which is fine because we can jump to metals, which has
Right.
plenty of opportunity. But at first blush, this looks like a lot. It's like, okay, it's at $75. It's been as low as 50. It's been as high as 85. I don't know what this thing means, but just digest it a little bit. Get into the short term, because scalping is, no matter what your strategy is, and no matter what your bias is here, no matter what market you're trading, scalping futures is, an intra or interday trade here that
Right.
should at most be for the medium term. And when I say medium term, I mean a couple of days, a week or
At the
two.
most. And that's
And
the
when you,
smallest percentage of the trades. Absolutely. I think
yeah,
to start with, if you're going to trade, if you're going to scalp ranges, which is take short-term directional assumptions, I think they're managed within, again, as a function of price, but within a manner of hours. These don't become core positions.
absolutely. And so what you've done now is you've gone from, having to make this big guess.
Right.
It's like akin to the stories of people, gambling back before all the PSAs went out and they stopped gambling and now gambling's ramping back up. But you'd hear these stories of like, plane ticket type of bets, right? Where it's like, I'm going to put all of my money on the Cowboys this weekend. And if I lose, I'm skipping town. Like no one wants to do that with their money. And you don't want to do that in metals, where it's like, all right, it's December 17th here. It's 1 p.m. Central Time. Metals are near their highs for the session. They're not at their highs for the year. I'm going to make a big bet on short. Like no one wants to do that. So you make it a little bit smaller, scalping a shorter term game. And when you do that, you could see, oh, wow, metals the last couple of months here in a nice tight range and seeing both sides of that range constantly. So what you and I have done, and everyone can have their own opinion, their own strategy, but what you and I have done is simply look at buying below 73, selling above 75, and then the strict mechanics that come along with that make this strategy, if it has that edge that used to be between the bid and the offer, now you have to be a little bit more creative, a little bit more inventive. If that has had edge, you have to have the strict mechanics. And our mechanics have pretty much been, and it's very simple with small exchange products, setting those exits and entries at just like $100, but you have to stick to them, Pete, because then you get
Right.
this situation. This is what we love to see, right? You've got the red X's on the board. Losses are going to happen in futures, and especially in scalping futures.
Right.
You're not going to win 95% of the time. But what is amazing here, and I would actually contend rarely happens, is you've got 6 winners on the board here out of 8. That's a great success rate there. And at no point did you let any of those losses exceed the amount that you were taking. Like this is huge, right? Is setting the mechanics and then sticking to them.
Right. And I think that is the key part is none of us make great decisions under stress. And usually that stress in the markets is not when you're right, but when you're wrong. So it's so important. We talk about strategies with this bias, mechanics is making both those decisions ahead of time. You're more likely to make symmetrical decisions if you make that decision ahead of time. Now, do we all do this where we don't stick to the mechanics? Yes. And does it lend usually to a bad outcome? Absolutely. But if you force yourself to say, when I'm wrong, this is what I'm getting out. Here's the thing, guys. Sometimes you're going to get out and then half an hour later, it would have been aware. Now, you know what? You can't look at that like if I had only, no, you stuck to the mechanics. You're letting statistics work in your favor and you're trading a very productive range. You by definition, you say some of those will be losers. Absolutely. And some of those you will manage, and there would have been a better spot to manage them if you waited 2 hours. But that doesn't mean there would have been, as we looked at it in our gold example, dramatically further away from where you were engaged. So I think this, and it's funny, a lot of times you'll see people cherry pick a range or a level to make kind of a story or a strategy work. Here, you just picked opportunities going back from where we are right now, rolling back the previous 2 months, and you can see how this sets up in a very clear and manageable way. And I think that if it's $100 or 120 or 80, that's where your individual mechanics come on board. We like to use the statistics to help us make the decisions. We feel that tilts it in our behavior. But I think this is such a clear example of what mechanics mean when you're trading directionally short.
And we're getting dinged on, dinged on this trade right now, which is we just got short SPRE here this afternoon. The market is above $76 now. And if it gets up to 77 or 78, we're out. That's the end of it. It's not a matter of cherry picking this and being like, oh, we've got all these winners. Look at all these winners. No, you got to deal with the losses. And, something that I love to go back to, especially in trading, the best traders, you have no clue if they're winning or losing on any given day, because they don't sit there and scream at a trade and say, this thing needs to be higher. It should be higher. I'm fighting this one position, because they take losses every single day, but they take more winners than losers, and they don't let those losers get out of hand. It's this gambling professionals, trading professionals, everyone on down the line knows, hey, I'm going to lose a good amount of these. I just can't let those losers get out of hand. And now I wanted to end with a little bit of a different example, but one that's getting more and more relevant here, Pete. Markets like small yield, you can form that opinion on, and it's not to say you shouldn't have an opinion on metals, only trade the range. A lot of people are saying, oh, I think yields are going to go higher, I'm going to be long, or I think yields are going to go back down towards zero, I want to be short. Totally fine, but the opportunity is still there in the ranges. It just can look different. And this isn't a matter of, oh, Frank's just putting up some lines and after the fact. It's just letting you know that you have to adapt with those ranges, because Pete, tell people what's going to happen. If this market here in SPRE gets up to 77 or 78, doesn't come back down, what are you going to do as a futures scalping trader with that market? You're going to adapt, right?
Absolutely. I'm going to, again, my strategy was wrong. I'm going to manage my position. Then I'm going to reevaluate, is this still an interesting level, or are we finding a new, we always talk about, okay, the market's now just a new trading range. That way, we're not arguing with the market. We're taking what the market says to us and accepting that as that's the environment we're living in. We're not like, you should be 3 handles lower. We've all seen that, and that is never a productive exercise to watch, and it's kind of painful to watch. The paradox of argument with the screen or with the marketplace. So you're absolutely right. So your strategies can live in a number of different time frames. Just be mindful around your goals going into them. That will help you determine the mechanics that are comfortable and let you be more inclined to manage them effectively.
Absolutely. And that's Scalping Futures with Strict Mechanics.